Monday, traders. So the big news that the market is going to start trading on this to start the week is obviously the Moody's credit downgrade of US debt from AAA lower. So look, we got that news late Friday in the US session. It came after the cash market closed, and it actually came only 10 minutes before the futures market, the aftermarket, closed for the weekend. So the market has had very limited time to trade this news from Moody's. So Moody's is the last of the credit rating agencies that has downgraded the US AAA. So the US no longer has AAA status with any of the rating agencies. Now, generally, obviously, when we see the credit rating agencies downgrade the US, it is followed by some decent and in the past some big market moves, and obviously they are not bullish moves; they're risk negative. So generally, we do see equity markets lower. We've just seen the open in Asia here of futures at the moment. S&P, Nasdaq, so US equities, have gapped lower, almost 1% on the open. Now, look, these equity markets at the moment in the last month have been exceptionally bullish. We have been trading back up towards record highs, and really hasn't been anything in the way of that. So finally, something has come out, potentially to spoil the party. But this market is, at the moment, the traders are conditioned to buy dips. Buying dips has been working. No doubt they're going to be there again. So not too sure exactly how low these equity markets are going to get hit on this news, but I guess we're really going to have to wait until the US session to find out how they trade that. To see exactly how negative, or lower the equity markets can go. But at the moment on the Asia Open, it's more a subdued reaction, I guess is the best way to sum it up. On the back of these downgrades, generally you do see selling of the US dollar. We have been seeing that this morning, and I guess it's been probably best. Well, the biggest hit's probably been to dollar yen. We've seen dollar yen trade down, almost a big figure, back down towards 145. But what we have been seeing in the currency space in the last few weeks, it has been it's been pretty choppy trading. We really haven't seen any sort of big directional moves. So I would imagine that probably will continue at the moment. There really isn't a strong bias, either long or short US dollars at the moment. But I would suggest maybe staying short dollar yen. That does seem maybe like the best trade in the currency space at the moment. And we'll talk a bit more about that later. Now moving on to the commodities, gold loves credit downgrades. And we're seeing that probably the biggest move so far in the open of Asia. Gold closed around 3,200, and so far in the first hour or so of trading, it's up $40 in a straight line. Now, gold technically, the big levels to watch out for at the moment is around that 32.60, 70 area. For gold to look a bit more constructive and positive, it needs to trade back above that. If it does trade above that technical level, then the next thing the market will be looking at is the gap fill up towards 33, 20, 30 area, and that's an area that gold gapped lower on when we had positive news with respect to US and China on lowering their tariffs. So if there is something to get us up to fill that gap technically, possibly this news on the credit rating downgrade could do that. So at the moment, yes, gold is looking exceptionally bid opening of Asia, and obviously anywhere down towards 3,200, I imagine is good support in the short term. Look, some other news that we've had out recently is we had high-level meetings, Russia and Ukraine in Turkey. Those meetings finished just before the weekend, and obviously no one was expecting a peace agreement, but there was hopes maybe that there would potentially, be some sort of path towards a ceasefire. But none of that eventuated either. The only thing that the parties agreed to is to talk again. The US is getting increasingly frustrated with this, and one of the things that we are hearing from the US is that potentially that they will increase pressure on Russia with increased sanctions, and also sanctions on countries that are buying Russian crude. So look, if you are trading crude, obviously these headlines matter, and if the US did actually get aggressive on Russia again, we would see crude spike higher. So certainly if you're trading crude, you need to keep up to date with what's happening in this space and these headlines. Okay, this week is there's not much in the space as far as event risk goes, and any sort of major US economic data. But we do have the Reserve Bank of Australia meeting tomorrow on interest rates. The market does expect the RBA to cut rates 25 basis points from 4.1 down to 3.85%. Now last week we did get some very strong employment data. Headline came out almost plus 100,000, so a huge number, showing that the employment market at the moment in Australia is still, is doing exceptionally well and is solid. So look, if there was a central bank meeting or an RBA meeting where you could get a big surprise and a hold, it could be tomorrow. Having said that though, the other thing that market's going to be focused on is obviously the press conference with Michelle Bullock afterwards, and whether or not it is a hawkish hold in that, a hawkish cut in that the RBA may want to be on an extended pause, just because of obviously the economy still being on a solid footing. Aussie is trading at the moment a range of around 63.5 to 65 cents. So depending on exactly how this RBA pans out, if the RBA is, say, potentially does a hawkish cut, we could see the Aussie higher, and obviously if they surprise and did not cut, obviously Aussie would spike up towards 65 cents and potentially could break that. So Aussie RBA meeting tomorrow certainly is something to watch, and good to see some volatility in the Aussie. But another event that here in Asia that's worth watching is going to be the Japanese CPI that's released on Friday. That is supposed to go up from the previous month and is well above the BOJ's 2% threshold now. So that could certainly get the market starting to get excited, maybe that the BOJ will have to hike rates sooner rather than later, and obviously that will weigh on dollar yen. Dollar yen certainly can move. So going into that meeting, certainly I think bias would be short dollar yen. But anyway, regardless, look, at the moment, market start this week is certainly going to be just trading this Moodys downgrade. So good luck with your trading to begin the week, and we'll check back in with you soon.